Hey, everybody, and welcome back to another episode of our Arizona Monthly Housing Market Update. I am Katie, and this is
Matt and
Ryan. Welcome back, everybody.
Hey,
Happy 4th of July.
Yes, happy 4th of
July
to you all. All
Absolutely.
right. Holiday or not, let's dive right into the news that everybody wants to know about, Ryan, which is always your news first.
Okay, it's great to know, and it's crazy to think you're already halfway through the year, and the big story so far this year is in the mortgage world is when will the Federal Reserve cut the funds rate? This will help lower mortgage rates. This will lower the cost of borrowing money. It's going to help increase spending, stimulate the economy. Now, the Federal Reserve has two mandates. They need to keep inflation low, and they need to keep a strong jobs market. They've succeeded in lowering inflation, after we saw a huge spike after, the pandemic. Right now we're very close to their target of 2%, and that's a huge improvement of 9% in 2022. We're all feeling that. But the Fed Chair Jerome Powell, is still staying firm, and he's not dropping rates. And why is that? The one reason he's concerned that the tariffs are going to increase costs and spike inflation. And the other reason, we're getting strong jobs numbers. We just got the Bureau of Labor Statistics, BLS, the jobs report, and they reported that 147,000 jobs were created. That's well above the 110,000 that were estimated. So, the fear of higher inflation because of tariffs and these strong jobs numbers is really keeping the funds rate unchanged. Now, everybody's probably seen in the news, President Trump isn't happy about this, and the Secretary of Treasury, Scott Bessent, isn't very happy about them keeping it unchanged as well. They've been really turning on the pressure with the Fed Chair Powell to drop rates, just because they are pointing out that inflation is low, and they're even asking Powell to resign before his term ends in May. That they're asking and even starting to look for a replacement already. So it's been entertaining. They're really turning up the heat on them. So, the second half of the year, mortgage rate wise, this will still be the big story. When is the Fed going to cut rates? If we continue to see inflation low, even with the tariffs in place, if we see the tariffs drop, if we see jobs and spending slowing, rates will eventually be cut. That's going to be a huge help to these kind of stubbornly high mortgage rates. So that will continue to be the story of the second half of the year. So we'll see how that plays out.
Awesome. Well, they have pushed down just a bit in the last couple of weeks, we've noticed, and
Yes.
That has sparked a little bit of activity in our world. How have applications been over in your office?
We've seen a big uptick, actually, the last half of last month, actually, of June. And, I think a lot of it has to do, obviously, with a little bit more inventory out there. Our clients are able to pick from more properties. Sellers willing to give some more concessions to do temporary rate buy downs. Even though rates are still elevated, they're able to get the payment that they want, at least for the first few years of the mortgage, as we wait for rates to drop. So, yeah, I think a lot of people are getting off the fence and getting out there.
And we're still talking about assumable mortgages with some of our buyers. Are you still having those conversations as well?
Yes, we are. Yeah, definitely. And we're always going through those numbers because there's a lot of those out there.
Yeah.
And, the listings are always advertising it. Hey, get a rate at 3%. And that's always going to attract buyers. So, yeah, we're always kind of walking them through that. You have to get approved through the seller's bank to assume that mortgage. But the big issue sometimes is really having to make up the difference between the mortgage that you assume, that loan amount, and the purchase price. And coming up with that much of a down payment or getting a second mortgage. Sometimes it doesn't make sense to do the assumption, but that's a great option out there, and it makes sense for a lot of people.
Yeah, absolutely. And, some other conversations that I've been having with buyers lately is they're just feeling, even though, yes, rates are a little bit elevated still, and, costs are still a little higher than they would like to see, they're feeling less stressed out about having to jump to a decision. Because if they don't make a decision, that house is going to be gone tomorrow. Or like you had mentioned, there's a little bit more selection out there. So I'm finding that buyers are being more selective, and they're even, they're considering several areas where maybe they were just targeting one area. Also noticing that as the prices relax a little bit in the interior in the cities, starting to see buyers come back, maybe come off of new builds a little bit more, where those are in the outer lying areas, and come into resales that are a little bit closer into the city. So I've been seeing sort of that migration a bit. And then inventory levels actually have fluctuated. Matt, you reported yesterday on our social media that there was a little bit of a dip. You want to talk about that?
Yeah, definitely. It was, I think we're in the season that we usually end up seeing an increase in demand. So therefore you end up seeing, sales inventory drop. But we're at the tail end of that season.
Right.
Usually it slams its brakes on leading right up to 4th of July. And 4th of July is usually when it stops. One being that it's, it is in the middle of the summer, so a lot of people aren't not wanting to move here. The other side of it is this is when a lot of our kids go to school. They go back to school in the middle of July, so middle to end of July now. So
Right.
a lot of people are really kind of like, all right, let's try to get this done while they're out in their summer break. Now, that's really not going to change things, I think, for the rest of the country that are coming in. But as far as our inventory, yeah, we saw, I track it week over week. That's going to be Pinal and Maricopa County. I'm looking at all dwelling types. And ultimately, we are, we saw a 3% drop. It's been the biggest drop I've seen in over 6 months, week over week. So I think that's really big. Now, what I like to do is I also like to correlate that to our rental market, because I think they really kind of tell us what's happening here. If we start to see, weird activity where they're both dropping at the same time or they're both spiking at the same time, that can really mean a lot. What we usually do see is it's kind of, a little bit of a stair step. Sales goes down, inventory in rentals kind of goes up, and vice versa. Mm-hmm. But what we saw was it was trickling up on the rental front, and it's actually been slowing down. So I'm seeing an average of like 1.5% week over week of increased inventory, and this last week was 1% flat. So to see that happen at the same time of, a big drop was interesting. We also have to think of the seasonality when it comes to rentals.
Right.
Who are the people that are really putting their homes for rent right now, as far as landlords go, and then who's really going to be in this rental market.
Right.
But yeah.
Typically slow season for rentals this time of year. I mean, we know that with our rentals, we personally feel that. Cromford Report is telling me, and we know this, guys, we've been around the block a couple times. September through November is the peak season. That's the high season for rentals. And I think that's something that we feel as well, not only with our personal rentals, but with our clients. And Cromford was saying something a little interesting. Actually, I had a report that came out fresh this morning, and they were mentioning that the increase in rentals is probably from people who just decided not to sell. Maybe they're not, getting their price. Maybe they don't want to deal with concessions. We know concessions are really big right now, as Ryan said, and they're just flipping it over into the rental market. I mean, personally, we had a couple of those clients this year.
Yeah, and I think it's also interesting to what you're saying there, as well as, investor activity has been picking up a little bit, that I've noticed, and we work with a property manager that's actually really large, and they do big volumes. So to get their take on things and see what they're dealing with is interesting. And what OnQ ultimately told me was they were noticing that there's a lot of, we'll say, contingent buyers. They're dealing with a lot of people that really aren't landlords, but they have such a great interest rate on their home. They don't want to sell it at the loss. They do need to, or the decrease, and they would rather be in the position just to hold it as a rental and go on and purchase, which is a really good sign, because that means sellers are now feeling confident enough to take that step, and enough confidence to go into a rental market versus taking maybe the hit on the home that they need to sell. Now, that being said, he says a lot of them are also really not feeling the sense of urgency in renting it so quickly, so they're choosing to list high. Where in his example, he'd say, hey, I'd give them, let's just say hypothetically, a range of 1,800 would get it, rented right off the bat. 2,000 would be the high, and the tenants are saying, the landlords are saying, let's go ahead and list it at 21 or 22. So that right there, I think, is also having a big effect on our rental inventory, just because landlords are having that ability to kind of take their time or try to see what they can get. So I don't think it's really giving us a true indication of like, hey, there's some sort of scarcity or some sort of, troubling effect that's causing people to do this. No, if anything, it's demonstrating that they're making these decisions that show they have the ability financially to take these risks, which I think just says we just have a lot of good positive insulation on our market all around.
Agreed. And Ryan, question for you. Based on that scenario, when somebody is wanting to purchase and they currently own a home, but they want to rent it versus sell it, what does that look like on your end? I mean, obviously that's a little bit different for the situation, for the application, right? What does that look like?
Yeah, the good news is if you're vacating a primary property, buying a new home, and renting out your current home, if we get a lease agreement before closing, we could use 75% of how much you're going to be leasing that home for as income. And we could use that to really offset the majority of your mortgage. So it's not going to hold you back from qualifying for a new property. Some people, their income is high enough that they do qualify for both properties. So they're not in a hurry to lease out the property. They could move into the new home, clear the house out, clean it up, fix it up a little bit, and then rent it out. But if you do need to actually, offset your current mortgage payment with a lease agreement, if we have one before closing, we could use that as income to help you qualify for the new home.
That's awesome. That's helpful. Speaking of investors, Matt, any new news coming down the pipe for investors that you want to share?
Well, I think, as we said, the big, beautiful bill, we were talking about that. That's something that just recently passed. And it's, I guess, going to be signed on the 4th of July. Mm-hmm. There's a lot in that bill. Obviously, it's something that America is digesting. Some people are excited, some people aren't. And I think there's a lot of speculation on how it's going to unfold. Looking at the details that I tried to just see how it would apply to real estate, there are some things in there that are definitely interesting and I think stimulating on the real estate investment side. I think a lot of people, their initial thoughts, if they're not real estate investors, there's a good chunk of people that look at real estate investors as kind of a problem. But at the same time, I think it's very important that we do reflect on how real estate investors actually really stepped up and saved America. And that was back when our crash, of 2006 to 2009, when no one was buying and it was bad. They really stepped up. And yeah, there's some big companies that got, greedy, but there's a lot of little people, little guys that got in and really took risks and helped out. What this big, beautiful bill does is I think it really does provide some opportunity to those investors. They're going to be giving a lot of tax advantages as far as what interest you can write off, what improvements you can write off, really highlighting opportunity zones and what they can do there. There's also a lot of highlight from a commercial sector as far as like industrial and agricultural things that are really allowing people to kind of take on some risk. I've also noticed in that same realm with like the short-term rentals and things like that, where they're allowing them to kind of accelerate their taxes with that first year, allowing them to include larger improvements such as new air conditioning units and roofs and all this stuff, where they traditionally wouldn't be able to do that. What that allows them to do is say, hey, okay, we can go and do this versus knowing we're going to have to kind of pay all these taxes up front. No, we can kind of hedge that and say, all right, let's go ahead and improve these properties. And what that also does is it allows investors to kind of target the properties that are distressed,
right,
instead of just going out and building brand new, which really doesn't help a lot of the infill in the areas that do need help in a lot of the metropolis in America, which, the opportunity zones in their creation was originally set up for. This is kind of now doubling down on that and saying, hey, instead of going out just buying brand new land and erecting new, let's go ahead and look at this building that needs work, and we'll go ahead and help absorb some of that risk by giving you a nice little, tax padding this year to do so. So I think it's going to be very interesting to see that. I also think they're talking to some other people in the accounting world. they have a lot of wealthy, we'll just say regular, even, upper middle class that have been saying, hey, I really want to jump back into the real estate investment side of things, not just be in the whole stock market and such. But they're apprehensive because it is more risky. There are more things that you have to juggle. And they're noticing that a lot of people are getting ready to jump off the fence, and they were kind of excited about this. So I think there's some good things there that are kind of going to time appropriately with this whole, hopefully a rate adjustment coming sooner than later. It could be very, very well for their real estate industry as a whole.
Awesome. Well, thank you for sharing that. All right, guys, is there anything else that we should pack into this already value-packed episode? Anything else before we go, guys?
No, I just, I kind of beat this drum every time, but I do think the light at the end of the tunnel is brighter than we've seen it over the last few years. I think there's been a lot of, that light slowly dimming on what's going to happen with this whole big change with how tariffs are going to be implemented. We've now had time to stretch our legs and see how that goes. And I think the worst is really behind us. And then also to see, what's going to happen with all the wars and all this stuff that does really create a lot of an emotional barrier to people to make critical decisions. And I think we've also been able to see the light on that. So very much, I think this is a time for buyers that are on the fence, that know they're financially prepared, but might be a little hesitant. I would urge you to really, really focus and look, because this is the time to buy and have that chance to select versus trying to, catch up if things take off quickly when interest rates lower and investors jump into the pool.
I could not agree more. Great advice, sir. Anything else, Ryan, or do you second that?
Oh, man, no, that was well said, man. I completely agree.
Well, thank you. Well done.
Awesome, guys. Well, wishing you all out there again a happy 4th of July to you and yours. We will see you next month. If you want to check out any of our previous episodes, or maybe you want to keep up on the weekly rate update that we put out, or maybe you want to check out Matt's month-over-month inventory, week-over-week inventory report that we put out, then hop on over to our YouTube channel. It is at Team Evo AZ. That is our handle. Or if you like to listen to us podcast style, you can do so by doing a search on your favorite podcast platform for Arizona Real Estate Radio. There you can find us, download, subscribe, all the things, and you will never miss a beat. One thing that I do want to mention before we go is, and this is something new that I have started sending out to all of our clients, and I want to share it with our followers as well. In the show notes, there is a link to stats, to market information that is constantly updated throughout the month. You'll find this show there. The other things that I just rattled off, you will find there, along with my Cromford report notes every month from the meeting. Just so much value, so many stats, so much information about our market, guys. So check out the show notes for that link. We will see you next time. Bye, guys.
Bye, everyone. Happy 4th.
Looking to buy or sell in Arizona's hottest neighborhoods? Meet Team Evo AZ, your Arizona real estate experts, driven by data, powered by passion. Meet Matthew Lambert and Katie Holly Lambert, the powerhouse duo behind Team Evo AZ at eXp Realty. With their talented team of agents, they're making Arizona real estate personal and powerful. Trusted, tenacious, Team Evo AZ. Team Evo AZ offers full-service real estate, powered by strategy, experience, heart, and a passion for helping people move forward. Ready to make your move? Visit www.evoaz.com and follow us on social media to connect with us.